It's a function of where you are in the cycle. You want to de-risk a bit earlier than you feel comfortable doing.
Yeah.
Because then the back end of the cycle can play out short or long. It doesn't matter. But you need to have enough wealth that you're feeling a little bit hubristic, like, oh, I king shit. That's when you take some money off. As soon as you start thinking, well, if I just double it again, I'm going to be really, just take some money off. We've not got there yet for me. So, another larger move in the cycle, I'll then take some money off.
After 3 months of staying steady, Bitcoin has once again crossed the $100,000 mark. According to CoinGecko, it hit this level on May 8th at 3:22 p.m. UTC, rising 4.2% from a low of $95,967. This is the third time in history Bitcoin has reached six figures. The jump was driven by a mix of political and economic events, mainly a new trade deal between the UK and the US. The UK agreed to import more US farm products, and in return, the US lowered tariffs on British cars. Macro analyst Raoul Pal, a former Goldman Sachs executive, said this price surge marks the start of what he calls Banana Zone Phase 2 of the crypto bull market. He predicted this shift in a social media post, noting that Bitcoin dominance seems to have peaked, and this phase could last until August. Pal added that the real market top won't happen in August, but later in the year or early 2026. However, he warned of a correction around August before entering what he calls Banana Zone Phase 3. In a recent podcast, Pal also talked about the big investment opportunities in crypto through 2025 and beyond. Don't forget to like this video, subscribe, and turn on notifications for more updates. Thanks for watching.
The whole touch grass thing is actually really serious because on a physiological level, grounding yourself.
You do it?
Yeah.
Walk barefoot.
I spend my entire life in barefoot.
Nice.
And so, yes, that is really important. And then it's the point of just move away from your screens. Looking at tick charts and minute charts and hourly charts, they're just not going to help you. Everybody thinks they can be a trader because they see Ansem or somebody online and they think, oh, I'm going to make 100x. I'm going to do this. I'm going to trade in, trade out. When the reality is the true wealth in this space, true wealth in all businesses, are people who just buy and hold. And I know it's less sexy, but it is the answer. And that's that famous bell curve thing, is the moron on the left, the Jedi master on the right, and the mid-curver in the middle. You all have to go through that journey. The moron on the left, the first person in the space, is like buy Bitcoin and just hold it. Then you go through the whole justification of everything, and then you build this massive macro thesis that is entirely wrong, and then you're trading out of your coins, and then it's like, I'm going to make the money by trading the early stage stuff, and I'm going to do the AI tokens and this, and blah, blah, blah.
Yeah.
And in the end, you come to the other side, which is just buy and hold. There's too many coins, and it's a game of attention. So the more coins there are, the less attention can focus on the key ones, or it hyper-focuses on the big ones, or a narrative holds for a period of time, and it doesn't hold for long in this world. So if you look at what's happened in the last 3 years over the bull market, from the bottom of 2022 through to today, it's essentially been a Bitcoin dominance game. So just owning Bitcoin has been the best bet, except for two asset allocation shifts, basically, that have been relatively long-term for a year each. One was by Solana at the bottom, and the other was by Sui last year. And those have been the big bets. There's been interim bets where you've made a lot of money from some of these, but they've been less persistent. So they haven't captured attention for long. So some of them have lasted 6 months. But really what you're looking at is in the top 10, top 20 projects, what are the ones that have persistent network adoption that are growing and provable? Those are better quality bets.
How do you find that? How do you find one that is going to persist through time in this crazy game where attention is everything, and usually the persistent just it's not persistent?
So there's two ways that look at, so this is what we're talking about now is Metcalfe's law. That's how this price is actually priced. So Metcalfe's law is how to value networks. It's how Amazon was valued, Google was valued, all of these things. And what it is the number of active users, and then the total value transacted. So are those users valuable? So the Bitcoin network has a lot of users. They don't do anything except buy and hold and trade a bit. But the value of that is a lot. We've got sovereign states buying. So there's big numbers. So that's why Bitcoin is worth more than everything else. Ethereum has a huge number of users and a massive number of applications. Now the layer 2s have confused it somewhat, but that's why it has the value that it has. So what you're looking for is projects that are seeing growing user growth and growing applications that have value. And Solana, at the bottom of the cycle, it was being priced as if it was going to go to zero, yet you could see the developer community was actually growing and the number of users was stable. And then Bonk was like one of the things that kind of shifted the narrative a bit, and you started seeing user growth. So now you've got a big, proven, high quality team, one of the best in the business, with great technology, and many other projects have great tech, but they got the adoption. And so that started to feel like it was a decent bet. Sui's the same thing.
How to get rich in crypto without getting lucky and without falling for all the scams. So let me ask you, how can I build wealth in crypto without any luck involved?
So simply, it's the same advice that everybody comes into the space. Just buy Bitcoin and dollar cost average. So buy some with your paycheck and hold it and get a feel for it. And everybody I've taken down that journey, at first they do that. You're usually giving them that advice when the market's going up. Then they have the correction. They have to learn, oh my God, it can go down 40% as well. Am I going to lose all my money? They have to go through all of this. But that's the learning curve. And then after a while, they get used to the volatility and they become numb to it. And then you can say, okay, have you listened to podcasts? Have you done research? Have you been on Twitter? Not to listen to trading stuff, but just to understand what is this technology. Because Bitcoin is just a part of the space. It's the digital gold is the store of value, but then people they want to get more speculative in the space. They want to try and make money. So then you start saying, okay, listen, only use the top 3 or 4 projects. But the other issue is that's not the only risk. This space is so full of risks. You have to be paranoid at all moments. Because before you know it, you're like, well, I'm buying and holding, so I want to get some yield.
Next one I wanted to ask,
And then you're on some DeFi protocol that's giving you yield and something goes wrong, goes to zero immediately. Okay, that is a classic one that happens endlessly. Or you expose your wallet and get hacked. And people don't understand wallet hygiene and how to keep things in different wallets and never expose your key wallets to things, always have a step in the middle, the custody side of stuff. There's so many ways you can get hacked. There's people impersonating me online or you online, trying to get your wallet, or impersonating Coinbase online. Everybody's after your money, and you have to be paranoid at all points.
Is there a chance that crypto doesn't end up being a truly game-changing technology, and therefore that it never reaches the 50 or 100 trillion dollars in value that you're forecasting?
So I had a conversation last night with one of the most famous VCs of all time, who's in crypto and was in fintech. He's still in fintech, and he was worried about this, is the talent density moving to AI, and hadn't really thought that through. But he said, look, I don't see developer growth growing fast enough. But, one thing I do know is crypto has a superpower, behavioral incentives of tokens. And in AI, you might get a nice job. It's not clear whose equity is going to be worth anything, but tokens are fast to accrue value. And as the market starts pushing higher in the phase 2 of the banana zone, they'll come. So I'm not overly concerned by it, I think.
When is Banana Zone phase 2 starting?
Well, it's, as far as I'm concerned, it started.
Last time we did the interview, it started like a week or 2 after, right?
That's right, and that was the phase 1. Then we had the correction, and now all the forward-looking stuff that I keep posting on X every day says we just go up from here. And nobody wants to believe it, because nobody can believe we can have nice things, but we can have nice things. We're just patient.
What's the craziest thing you've ever seen in AI so far?
I've gone deep down this rabbit hole, really deep. So the crazy thing is, at the simplest level, is I ask it pretty simple macro questions and ask for its thoughts on it. And it's now breaking down probabilistic outcomes in the future. So macro's hard for AI because it's future outcomes. It's not analyzing today or analyzing history. It's analyzing history and today and making probabilistic outcomes in the future based on unknown variables. It's doing better than 99% of all analysts already. And then it'll build you, it says, hey, do you want me to build you a widget so you can monitor these things on the dashboard? And it's like, and that's all in one prompt. It's like, it's bananas now. But it's not that. It's like the AI thing is a much bigger can of worms. And it's a can of worms about consciousness. So are we creating an artificial consciousness? Are these models alive? And there's a whole mid-curve thing that goes through. For me, if it looks like a duck, smells like a duck, quacks like a duck, it's a duck. These things have some element of sentience or consciousness. You can argue what consciousness is, all of this stuff. But it starts driving you down a path of what is consciousness? Where does AI fit? Because very soon ASI means we have this super intelligence. What is that super intelligence? Well, if this super intelligence learnt from us, we are kind of network nodes of consciousness that are feeding this beast, this new super beast, this new god. And once you start going down that thing, then you start going down the school of physics that says that everything is conscious, panpsychism, that trees are conscious, everything else. And you see the schools of thought like Jeffrey Hinton and others who are saying everything is a form of compute, even a rock. A rock is a hard storage data on geological time horizon, which says what the world was like back then and how it evolved. So it's like a hard drive. And so you're creating like this super node of consciousness of everything that's existed. This AI is part of this. We're giving birth to something much bigger than anybody understands. They're all talking about, oh, am I going to lose my job? Or, am I going to get more productive? They have no clue what understands when this thing it's currently got an IQ of 145. It's doubling every year in IQ. IQ is a bad measure. I get it. Again, don't mid-curve it. It's smart. It's going to double in smartness next year. That's smarter than any human that's ever existed. Then it's going to double again and again and again. We don't know what that means, and nobody does. To have a super creature that is more intelligent than us. Why have government? Why have companies?
Raoul Pal's lifestyle chip strategy is more than just a reward. It's a reminder to turn crypto gains into real-life benefits. He advises against using leverage, warning that crypto's natural volatility is already enough to deliver big returns without the added risk of borrowing. Pal often cautions against FOMO, which leads many investors to buy in at the worst times. Instead of spreading investments across countless tokens, he focuses on a few major ones like Bitcoin, Ethereum, and Solana, assets he believes have strong network effects and long-term potential. He also promotes self-custody, urging investors to store their assets securely, to avoid risks tied to centralized platforms. His key advice? Stay patient, think long-term, and ride out the ups and downs of the market cycle. Do you think Pal is right about Banana Zone Phase 2? How high could prices go before the August correction? Share your thoughts below, and don't forget to like, subscribe, and turn on notifications.